Morning, everybody. How are you all doing? Happy Friday. It's Friday. I like Friday. Afternoon, morning, even. Danny, Paul, Marco, Evil, Noob, Mumo, how are you all doing? All good. So, today is Friday. We've had the news out this morning of the pound. What was it? Pound. CPI, no. Retail sales up to 0.4, and it was forecast to be a negative 0.3, so quite a big increase, but very little movement on the pound. The DAX has taken off like a rocket this morning. Look at that. Absolute flyer this morning. Blimey. No movement on the FTSE, but the DAX is pretty much done its range. Blimey, well, that's a big move today, isn't it? Look at that. So huge 5-minute candle on the DAX. As you can see from the pound, very little movement so far off the back of that news. Again, we're not getting much movement off of news at the moment. The markets are still unsure as to what to do with all this Trump tariff stuff. So, morning, Ace, Gregors. It's time, Peter. How we doing? Yeah, so very little movement on the pound, as you can see. We have had a kind of slight positive move in the last hour, but ever so slight. I mean, it's very small. So not really anything to write home about at all there, although it is quite a big positive. So market's really stagnant this week, as you can see, with a lot of this stuff. This is the last week. We are very, very, very sideways this week on everything. The market's just gone into a dead zone at the minute. No idea what Trump's next move is, and until there is a next move, I don't think the market really wants to do anything at the minute. So slight weakness on the yen and the Swiss this week because we had the safe haven runs. Trump obviously reducing tariffs to China. No more news. The market's kind of going from extreme fear into fear. So bit of money coming out of the safe havens, going back into the stock markets. So the Swiss and the yen really is the only thing, as you can see, we've had any real movement on this week. Other than that, it's just been sideways. As you can see here from the Swiss yen chart, that kind of shows you that the Swiss has been slightly weaker than the yen. That would make sense because the Swiss usually gets more than the yen. So it's just an undoing, really. But yeah, really, really, really flat week this week. Look, sideways, totally sideways. A little bit of movement, but no movement directional much, apart from the Swiss. So yeah, we're totally dead at the moment. So we're in a range-bound market. So this week, best thing to have done would have been live range bounds, high-low trading. But obviously, you didn't know that on Monday. If you had, you'd have made a load of cash. But yeah. So that's where we are at the minute. So very little directional bias. Today's news, we've got the Euro, it's a Euro at the bank holiday. We've got the Swiss talking head this morning at 9 o'clock. So potentially some movement on the Swiss franc. We'll probably get an indication that they're going to drop rates back down to 0. They're sitting on 0.25 at the moment. So we may well get a confirmation this morning of that. We've got retail sales for the Canadian dollar this afternoon, and that's it. We've got Michigan half an hour after market open, but I may not be around this afternoon. Morning was check. I've got a meeting which could go on from anything between 1.5 to 3 hours, I've been told, this afternoon, and it starts at 12:30. So I'm going to try and get on for the open, but I might not be able to. And the trouble is I'll be in this meeting and I probably won't be able to know whether I'm going to get out or not. So assume this afternoon's stream is on at 2:30. If I'm not there, it's because I'm in a meeting. So I'm going to put a post out this morning just to let people know. I really haven't got a clue. So it's going to be one of those afternoons, I think. Right. So 5-minute ranges are in. No good on FTSE or the DAX. Fair bit of movement, which is good. So we have got some volume and volatility coming in this morning. Ranges are slightly too small for me at the moment. I've gone with the 3 ADR still at the moment. So because obviously these markets are very volatile, I'm using the 3 ADR at the moment just to make sure that I'm reacting to what's going on. So it's just short-term movement. I'm interested in what's going on in the last couple of days, and we're using those ranges. So at the minute, obviously, we should get a trade off of either the 10 or the 15 because we're using quite short time frames for ADR. But if you're using ADR 10, it's probably not going to be that much different at the moment because the last 5 or 6 days have been very much sideways, haven't they? So we'll have a look at what's been going on with everything this week. What kind of meeting is it? Not an exciting one. It's a mortgage meeting. So I'm redoing my mortgage, which isn't fun. It's just going through the ins and outs of your life, basically, paperwork, all that sort of stuff. So yeah, nothing exciting. I wish, but it's with mortgages, they give you this checklist beforehand of stuff you have to get together. Because I'm self-employed, classed as self-employed, obviously, and I also am still in a limited company, which doesn't really do anything anymore. It's really complicated, so I have to get billions of pieces of paper together, bank statements, all that sort of stuff, which I did yesterday. Got it all together for myself and my wife. But she said, depending on how organized you are, it'll be somewhere between 1.5 to 3 hours. And I was like, that's a really useful time window. So it's basically all done over Teams as well. So I don't actually meet anybody. So it's all done online. So obviously, I don't know. We'll see. So I'll either be here or I won't. Inside bar forming on the DAX. We just tapped out the lows on the FTSE. So just looking at the indices this week, we've obviously had this gap up on the DAX on that good news. So we are basically, I think today, heading back here. So this is your gap fill today. As you can see, it's well within ADR. Absolutely easy peasy to get back and do this inefficiency today. So I suspect we might be heading up there potentially today. And then whether or not the market comes back and fills this gap, we'll have to wait and see. At the minute, obviously, we are really, really not bullish. We're in a massive bear slump at the minute. So potentially this is just the pullback continuation short. So this next week is going to be quite critical in giving us some indication of it as if we're going to go into a bull or a bear market. This is how bear markets start usually, with a big sell-off. Then we pull back and continue. We don't get them very often, but when we do get them, that tends to be the way they work. So that was our last bear market there. You can see here, you got that huge drop. Then we pulled back. We actually pulled back pretty much all of the drop. And then the bear market got going. Yeah. That is much bigger than the initial drop that we got. It's more akin to the second leg down, the size of the drop that we've had here. But this is obviously Trump's tariffs. So we'd be looking at something along those sorts of lines, and then a continuation short for 3 to 6 months. Yeah. So this kind of next week, I think, is fairly critical if you look at where we are. Yeah. This is a good 61.8 retracement, deep pullback into a bear leg. So, but it could well just be a V-shaped recovery, pullback, continuation. We'll have to wait and see, won't we? So if we think it's a bear market, now is the time to start getting your shorts ready. So Dow, very much along the same sorts of lines. The Dow, obviously, gap fill is all the way back up there. We had that high from 2 weeks ago. We didn't quite get back to it. This week, we've put in an even lower high. So we've got the gap fill done to the downside on it. So as you can see, the market really hasn't got much faith in anything at the minute. So we're sitting around on the US indices, S&P's almost recovered. So obviously that was the main undoing, or pause, if you like, of the tariffs. Since then, markets kind of just no idea where to go, is it? So, and Nasdaq is, I think that's going to do the gap fill today by the looks of things. So we may well get a bull day today. We'll have to wait and see. So inside bar on the 10-minute range. 10-minute range again, still too tight on the FTSE. So I'm going to need this to push down fairly hard to take a 15-minute range break today. There's no chance of getting on the DAX today. So unlikely to be 15-minute breaks today. So I'll be taking 30s. Nice day yesterday, banked $800. Lots of lovely clean breaks yesterday. Couldn't really get it wrong yesterday. The US indices, super easy yesterday. So that was your 5-minute ORB, 5, 10, 15-minute ORBs, or I think that might have been a 30 actually, somewhere around there. But anyway, that was the first clean break yesterday. Didn't stop all day, did it? It's lovely. So beautiful trend day yesterday. Very, very easy to make money on everything yesterday. There we go. Right. Might get a FTSE trade on here. Don't think the DAX is big enough. Very volatile. Wow. Big move there. A lot of volatility today. Yeah. Looks like we might get 15-minute ORBs today. Yeah. Cool. God, I love the credit departments. Yeah. It's all good fun. Morning, Chris. SIHEA is still going on. I'm not running it at the moment, no. I'm just trading ORB at the minute. I'm going to reset everything next week. Just waiting for this candle to go in. You've got 30 seconds, and then we'll go and have a look at the FX pairs. Although it's not going to take long to go through the FX pairs this morning because it's all sideways. So, very quiet. Okay, 20 seconds left on this candle. If anybody's got any specific pairs they want to look at, let me know. Just these over here. Right, big sell-off underway. So we might be running for the gap fill this morning. Okay, so 15-minute ORBs are in play. There you go, short FTSE. And almost short on the DAX. It would actually be better if we pull back on the DAX inside that 15-minute range and then take a run at it, but we'll see. Okay, so no trade trigger on the DAX, but short of FTSE. Really wild spreads today as well. All good fun. Right. So looking at FX today, there's no ADRs today at the moment. Again, I've reset to ADR 10. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So there's your ADRs. That line is Trump's lunacy. So that's 10-day ADR at the moment. Back to there. So that's basically what I'm basing current ranges on. So we've got some back-end volatility from obviously all the tariff announcements. But this is the vast majority of what we're measuring now, which I'm kind of classing as the new norm at the moment. Until something changes, this is probably, or should be, what the market is going to continue to trade like. As you can see, it's not really going anywhere at the moment. So I'm using that as ADR 10 at the moment. So ADR reversals right now are pretty good because we haven't really had very many this week. But when you are getting to ADR extensions now, as you can see, there's no real directional bias on any of the markets at the moment. So the chances are either when you get to ADR, whatever time it is, it will reverse back the same day or the following day. So ADR reversals at the moment are going to work very well. So it's just a case of waiting for price to get to these levels, and then obviously looking on your lower time frames for 3-bar reversals or reversal alerts, whatever lower time frames you want to trade and enter on. But lots of sort of choppy intraday movement at the moment, which is kind of range bound with the odd grindy day. Yeah, so everything, we've only had one RSI signal, as you can see there, this week on this particular instrument, but most of them have been the same. If you look at the RSI dashboard, you see everything here as well. Weekly ranges, nothing has hit its weekly ranges this week. It's really, really dead flat. RSIs, there's hardly been any hourly alerts this week. I've been watching this and I've actually got it turned on to alert, not really had anything to act on. So I've been scalping a lot this week, just grabbing bits and bobs when price has moved, because it's not going anywhere. So it's actually been a pretty decent week, but not really any main strategy at play. It's just waiting for something to move and then just jumping on the reversion of it. So the extensions that we have got on, obviously, as you can see, is what I said earlier. It's all Swiss and it's all yen. So the safe havens runs that we've had in play, because obviously Trump has paused the 90-day tariffs and also started softening the tariffs to China, all the safe haven runs that have been happening, which is basically the Swiss and the yen being bought up and gold being bought up, all unraveling on the news that everything is sort of being less aggressive. So we should see continuations on that. So potentially, if nothing new is happening, we'll just kind of grind back to where we were. So all of these extensions you've got are mean reversions potentially, but could easily just grind away for a couple of more days or maybe a week or so. So just be a little careful with these. You're probably not going to get a massive move back down. However, obviously, propulsion gaps are still in play, as you can see. The market is still using orders, which means they will still get filled. So looking through all of them, Aussie, obviously, we're completely sideways. There's nothing really there. You had a 30-20, and that's basically what I've been using is 30-20. Sorry, 30-70. Support resistance and just scalping little bits out on low time frame. That's really all you can do at the moment. But there's been so few signals all week. It's just been a little bit dire. Aussie New Zealand, nothing there to act on. Aussie US, nothing really to react on there. The Swissies, obviously, we have had movements on back into propulsion there and holding. So look for it to come back down here. But at some point, you're going to come back down here as well. But could well be today. Yeah, the Swiss could turn around today and say we're definitely not going into negative interest rates, which could rally the Swiss, which means we'll be back down here at ADR by end of the day. So, yeah, that's it. That's really all you've had. But if looking through, the only things you've got moving here are 4-hour time frames. You've got the Swiss franc. So we've had extensions on those, which are potential mean reversion opportunities back up into sort of retracements, 50% propulsion gaps back up into there. So that's really all you've got as an opportunity this week. Very, very difficult to make money in markets which are just sitting around sideways like this. So you just have to trade what moves. Look at that for a reversal alert. That is the ugliest reversal alert I've ever seen. It's taken 2 weeks to change structure back to bullish. It's just awful, isn't it? But this is what happens when Trump gets in charge. He shakes it up, which is not a bad thing initially, but now it's going to be painful. So Euro New Zealand, you've had a double extension on that one. Not quite divergence, but very good rejection at this level here. You've got a 3-bar reversal on the 4-hour going in right now. Beautiful 3-bar reversal pattern. So yeah, easy entry on that. You've got 1.5 hours left on that candle. That should go, basically. You'll have had a reversal alert on that on the 15. There you go. There's your 15-minute reversal alert. Didn't actually manage to get a retest on it, so it could still come and retest these propulsion gaps. That'd be a great place to buy. So Euro New Zealand, that's extended. Pound Swiss extended as well on the 4 hour to the upside. You've got a lovely shooting star going in at the moment. Although there's a little bit more. You got this high here, which is the weekly high. And then you've got a lower high there. And then you've got a void, basically, where these propulsion gaps are. So could just grind up over the next week. We'll have to wait and see what happens with the Swiss. 9 o'clock, that news is coming out on the Swiss. New Zealand dollar Swiss, same thing. Yeah, 3-bar reversal forming there as well, look. That is exactly to the pip monthly high. Or low, whichever that is. Okay, so that's last month's low. We broke down literally to the pip in propulsion. So this support here, previous support, broke. We've not retested the propulsion break through that support. That is the test. So good looking short New Zealand Swiss. Again, 15-minute reversal alert. It's just gone in. Very wicky though. Look at the state of that. But bear in mind, in just over half an hour, you've got Swiss franc news coming out. So, morning Virginia. Morning noob. Does it matter if I run ORB on 1 minute or 5 minute? It's 5 minute. Yeah, can't run it on 1 minute. It's 5 minute strategy. New Zealand dollar yen. In fact, you can't run it on any other time frame. If you try and change it to 1 minute, it will flick back to 5 minutes. It doesn't run. It runs on. It's a 5 minute strategy. It's using 5 minute ranges. New Zealand dollar yen also extended on the 4. It's almost divergence. Almost divergence there. Bearish. Not quite. So that looks pretty good as well. But again, these yen runs, if the stock market is going to drop again today, and it looks like it's starting that way, we will see potentially more yen and Swiss safe haven runs starting, which means that that is a really good short from where it is right now. So this obviously is where we all kicked off with Trump. You've got these highs getting lower here. That is potentially going to be the lower high. Going back down again. So good extension to the upside in line with trend on New Zealand dollar yen as well. So plenty to choose from, but they are very high time frames. Nothing is moving intraday enough to really warrant a profit take move from the banks. So it's a bit tricky. Clean breaks short, FTSE and DAX. If you can call that a break. More like a trickle. But yeah, we are bearish today. So where do I want to take a partial today? Tricky. I think I'm just going to remain cautious at the moment. So that is at the moment 3R, my part. This area here on the DAX is the previous supply area resistance, which they broke through. We had that wick through it, but I kind of ignore wicks like that because this is obviously clearly where they were selling from. That was just an anomaly. So we've broken through that area, and then we pulled back into here. We haven't retested that level. There was definitely resistance there. So this area here, which is kind of where we've just tapped into, is potentially support. If we break that support, that area there is where I'd be interested in. and then failing that, coming straight all the way down into there. So today, really, if either there's no point in taking profit now, obviously. If that support holds, we're going to stop out and then we're going to flip long. But if that support doesn't hold, that is a logical place to take profit today, which is only a 1R. But at the moment, I'm kind of happy to take 1Rs. FTSE, very easy. Yeah. So yesterday's low is going to be supportive, which is this area here, basically, which we gapped up. So gap fill basically at the moment is holding. So if we have another go at that gap fill today and it holds, I want to be out. If it doesn't hold, obviously, we're going to flush down into here. So we'll see where we go. But yeah, FTSE's holding up as well. Look, got some buyers starting to step in now, and the DAX. So might be a bit rotational today. We'll see. A lot of volume coming at the open though. Yusuf, morning. Long time in the live this month. Tried to recover the losses and got nowhere. Trying to figure things out with the new market volatility down 60% since the whole squeeze has happened. Blimey, 60%. A lot. Yeah, volatility at the moment obviously is all over the place. So it's one of those situations at the moment where, like me, well, what I'm doing is just trading low time frame. So you can't pick a directional bias at the minute. There's no way to forecast directional bias because it's dependent on what Trump says. So markets will just go crazy intraday, or they'll do nothing. That's literally it. So, you know, I've covered it a couple of times this week in the live rooms. PMI day on Wednesday did absolutely nothing. Yeah, it's the third largest news event we have. It did nothing. CPI's doing nothing. Interest rates are changing. We're not even getting an ADR. Yeah, the market is just not interested in fundamentals because fundamentals in the world have just shifted. We don't know how trade is going to be conducted for the rest of this year. So therefore, you cannot forecast inflation. You can't forecast what's going to happen to your economy. Therefore, you can't forecast what your interest rates were going to be. If you can't forecast any of that, you can't forecast unemployment because you can't forecast business growth. Yeah. So fundamentals have just dropped off the shelf. They're just not useful anymore, which means you're not going to get trends. The trends are going to be in line with panic, fear, and greed, which means stock markets down and safe havens up, gold up, oil probably down. But they can adjust that, obviously, because they can change their prices. They can decide how much to produce, which they can control. So apart from that, you can't really pick a directional bias. Banks are not moving in a direction long term. Therefore, they're not taking profit on partial moves, not scaling in directions. So what you're going to get is markets that move like this. Yeah, and that is Trump. That's all you've got. So short-term intraday trading is the best thing to do at the moment. Things like ORB, breakout strategies, mean reversion at ranges. If you find something that looks like it's trending into intraday, get on it. There's probably a reason for it, but you're going to find the market just shifting constantly at the moment. Ranges are going to shift constantly. ADRs are going to be erratic. Nothing you can do about it. It's a chaos time. It's like the 2008 crash. It's just one of those things that you just have to weather, unfortunately. A lot of people lose a lot of money. A lot of people make a lot of money. Don't forget, every time you press the buy button, there's somebody on the other side pressing the sell button. So if you lose 60%, someone's going to make 60%. That's the way it works. A lot of what you do in this type of market is luck and holding on. Yeah, the market pays you what the market pays you. You press the button and you've got a 50-50 chance of getting it right. If you press the buy button, it's either going to go up or it's going to go down. The key in this type of market is when it goes up to hold it. But the other argument to that is if you hold it, it's likely to come back to where you took the trade from without making any money. So taking partials and just grabbing any cash you see is the best thing to do, and limit your downside. That's all you can do, is limit risk at the minute. Position trading, I'm starting the EA up again next week, but I'm going to be running on very limited pairs, just easing into it really, with small risk and manual entries. So I covered it on Tuesday basically, but no, Wednesday. So I'm going to be taking manual entries when I see something that looks good. So for example, where did we just see that 3-bar reversal? Euro New Zealand, wasn't it? Yeah. So for example, we've got a lovely 3-bar reversal on the Euro New Zealand on a 4-hour chart. So I will be taking a long and going, yep, I like the look of that long. My next entry at the moment would be probably a bounce off of the 3-week low. Yeah, so that distance-wise is 1 ADR, obviously, because that's where ADR is. So that's 1 ADR. So I would set the EA up to space me in 1 ADR apart at the moment, not half an ADR, not 3/4 of an ADR. There's no standard. It's basically get in with this particular instrument at the moment. I want to get in half an ADR apart, 1 ADR apart. Yeah. And then if that doesn't work out, I'll have a look at where we're going next. So if we don't get the bounce off the 3-week low, we may well get the bounce off of that previous low, in which case there's no point in me taking another position there. I'm just going to have one on here, one on here, and then I will let it run down into these highs, into that propulsion gap. So I measure the distance there, which is 2 ADR. So I'll adjust the EA to say, get me in here, and then get me in 2 ADR apart. And then I'll look for a pullback on that leg there. So it's just a case of, at the minute, you've got to adapt manually and, you know, look at what's happening on a day-to-day basis. If I press the button on this right now and go, yep, I've had a lovely reversal alert on the hourly time frame. There's a 4-hour 3-bar reversal going in. This looks like a fantastic long. In 2 hours' time, Trump could turn around and go, I'm taxing 175% on Chinese imports. Yeah, this thing is going to go through the floor. Yeah, doesn't matter what you plan, doesn't matter what you think a currency is going to do. It's going to do what Trump says it's going to do, because he's in control of the markets. So, and just make sure you listen out when he says, now's a good time to buy it. Not the most subtle signal, is it, really? But what it's doing. How is developing going with the new ORB? It's running. This is it. I'm trading with it. I haven't had time to do anything with it. So it's ready to go, but I can't release it without about 6 hours worth of videos, unfortunately, and I haven't had time to do them. I've got to rewrite a manual. I need to explain how the loss recovery system works, basically, in this one, because the loss recovery system is much more complex. We've now got, you can or not use a loss recovery system. You've got multiplier. You've also got portfolio versions of loss recovery or single instrument versions of loss recovery. I've got to explain how all this works. No one's going to understand it if I don't. So I just haven't had time to get videos done at all with Easter and all that sort of stuff. So, but it's ready, but I can't put it out there because everyone will go, what's it do? I haven't got time to spend 7 hours in there. I need to do a video and say, watch this. You don't need to question me. So that's what I've got to do, but I haven't had a chance. So it's on my list. But I've been testing it now for, I don't know, it's been in live testing for 2 weeks. So it's ready. But I just have been playing around with it, and I'm just trying to break it, and I can't break it, which is great. But there's a couple of bits I'm still not really 100% happy with, but I can obviously patch those and tweak them. But the logic in here to do with loss recovery is very different. So it's the back test. I really need to sit down and do some back tests with it as well, because the back tests are going to be completely different results to the previous version, because the loss recovery system is very different. So in my opinion, it's better, but some people might not like it as much. So you have the option to stay with 3.02 or move to 3.04. So it'll be ready when it's ready, basically. Morning, Ismet. We had a great party the week our mortgage was finally sorted. I'm remortgaging, so it's I'm reducing my mortgage actually, so which is always good. Try to use DCA on 1% over ADT, ADR, you mean, in the M15 manually right now. Yeah. Try what you like. But all I would say, Yusuf, whatever you're doing, backtest it. But the trouble with backtesting at the moment is we can't find any previous period in time where we've had this sort of, we get shock. This isn't a shock, though. This is a complete rewriting of world economics. He's changed the way that we trade, and he's changed the relationships between countries. Yeah, we are no longer interested in dealing with the US. Neither is Europe. So we are going to do deals, obviously. We have to. But if we have a choice now, it ain't going to be America, because you can't blackmail us like that and expect us to be mates again. Yeah, all right, we'll get on, but there's no way we are being best friends with you anymore. So we are going to be doing much bigger deals elsewhere. So is every other country. So the way that FX relationships operate is changing. These two might become best buddies, and we might start doing a lot more import-export with New Zealand for things we didn't used to do in Europe, for example. If that's the case, the relationship between Euro and New Zealand is going to change. The way this moves is going to change. The distances it moves intraday are going to change, which will change the way that the Euro interacts with the US dollar. Yeah. So you've got a lot of things that are going to alter. So from a backtesting perspective, as long as banks and institutions still trade in the same way, as in have the same money-making mechanisms, which I don't think is going to change, we should still see market structure. But what we will see is different market structure on different instruments. So you'll find that if you do backtests on Euro New Zealand with a strategy over the last 3 years, and you get X result because it's consistently done that, it's going to consistently do something different. But it will do something like the pound US dollar used to do, for example. So as long as you're testing a theory based on movement distances, yeah, which is what position trading is. We are scaling in and we have distance boundaries, percentage drawdown boundaries. We have pullback target boundaries. As long as the market continues to move within those boundaries, nothing will be different. And I can't see banks changing the way that they make money. Yeah, it's just we may well be focusing a lot more on different instruments in the coming 12 to 18 months. It might be that gold comes back into play as a really nice, big, volatile mover, whereas it used to be awful, grindy, squeezy, awful for position trading. This might become one of the best things on the planet. Don't know, but it's different, isn't it? Everything's different now. But it may go back to normal. We don't know. This is the thing. It's an unknown. It's one of those things like COVID. Yeah, I sat around when COVID hit going, what do you do now? And eventually you just go, I'm going to try this. And you do that. And you just manage risk. That's all it is. All this job is managing risk. So you just got to find how to manage risk. And it's always creepy back in when you've had something that squeezes like we've had, because it's the biggest squeeze we've ever had, basically, isn't it? In the markets, it's the biggest collapse we've had on anything. We've never had anything that big, that fast, apart from COVID. It was bigger and faster than COVID. So kind of black swan territory, isn't it? Got to adjust. Super interested to see you taking manual entries. If using discretion might actually enhance your returns. Yeah, I've never not used discretion, have I? Though I don't let the EA. The EA doesn't do everything for me. This morning I've just changed the targets on this because I think my target's better than its target, so I moved it. Discretion. I've never not done that. I've done that all my life. I've never ever been an automated trader. I never will be. It's all discretion. but I'm still taking the same entries, yeah? Although I'm pressing the buttons here, I'll still be pressing buttons based on support, resistance, supply, demand, RSI, and ADR extensions. Nothing's going to change. I'm not just going to press the button because, you know, if I'm not going to go into this Euro New Zealand and press the button because I fancy it. I'm going to press the button because I've seen price action reversal happening at an area potentially that is right now previous rejection of propulsion. That's the reason. An EA can only use rules. Look at it, it's an RSI extension. So I'm just taking an RSI extension. Not doing anything different, am I? The way that I'm managing the trade is exactly the same. I'm going to scale in when and if the market moves against me. No different. But all I'm doing differently is I'm adjusting the distances based on the instrument and the movement at the moment, rather than a standard 3/4 of an ADR minimum, which is what in backtesting has always worked. It may still be. You know, this is the thing we don't know. 3/4 of an ADR is still the right distance to scale in at on every instrument. Prove me wrong. You can't, because you can't see the future, and neither can I. So there's nothing wrong with getting in right now and using 3/4 of an ADR to scale in using H4, M15, RSI mean reversion. It may work, it may not. It may be squeezy, it may not. You may have 5 trades on, you may have 3 trades on, you may have 9 trades on in the next month. Don't know. But have I ever known? No. No one can see the future, can they? So you just got to pick something. But I'm just being cautious. But it doesn't mean I'm right. Some people are going to contact me in the next 3 weeks and go, H1M5 is absolutely killing it. I'm up 16% this month. I'll be sitting here up 3% because I'm being super cautious. Does it make me right or wrong? Just different. Taking different entries. And then the month after that, I'll be going, I've just done 20%, and someone else will go, I lost 5 this month. Doing exactly the same thing as I'm doing, taking trades with a binary decision-making process. That's all you've got. So it doesn't matter how you get in, does it? This is what the position trader EA has got these buttons for taking trades. Why you take it is irrelevant. It's what happens after you've taken it. That's a 3-bar reversal. Typically, it's a reversal pattern at the low of a trend. Absolutely beautiful one. If it was there, I'd be pressing the button right now, because that would be amazing. It would be a support bounce after a trend with a 3-bar reversal. Can't get any better than that. Does it mean it's going to work? No. It's either going to do that next or that next. Nothing's changed. This is still a binary market driven by banks and institutional money order flow. Yeah. How you get in is up to you. But you don't make money because of 3-bar reversal. You make money because price goes the direction you've pressed the button in. That's it. Price action signals fail. Everybody that got in on that beautiful hammer just got stopped out. They were wrong. But if they're position trading, they're back at their entry and they've lost nothing. Because the market can only do one of 2 things, up or down. Risk. Don't explain, keep it secret. That way no one else copies it. Yeah, that was my intention. It's not rocket science, right? When you know how the loss recovery system works, 90% of you are going to go, I thought so. Because I have kind of explained it in the members streams, virtually. Anyway, so all it's doing, you know, I'm going to explain it properly, but all it's doing is basically taking yesterday's profit, today's profit, and saying, did we make money yesterday? If so, I'm not going to risk much. Did we lose money yesterday? If so, how much did I lose last time? Well, let's risk a bit more than that. Yeah. And then today, if we get a P&L bigger than yesterday's loss, it reverts back to going to normal risk. It's not complicated. It's just what I would do. Yeah. And it's not chasing losses either. It's gradually increasing. It's not martingale. It's not trying to do something aggressive to make sure that you win virtually every day. It's just being clever in the fact that if we've had a down day yesterday, like yesterday's P&L, you weren't here, you couldn't see it, but yesterday's P&L was negative 500 odd. the day before's. So yesterday, it didn't start at 1% risk. It started at about 1.25% risk. And we had losers. So then it upped itself to about 1.3% risk. And then we had some winners. So it's reduced itself back down to 1% risk. And it's just saying, I made a load of money yesterday, so there's no point in pushing it today. We're up. But the previous version worked on starting balance, this and that and something else. And it was just way too complex. And it was trying to be too clever. So this is a simplified version. So it is still a secret sauce, but it's not rocket science. I've been teaching people loss recovery for 5-6 years in the bootcamp. It's very similar. But with this, because it's an intraday strategy, we're not scaling in with loss recovery. We're using loss recovery on losses, but only if we need to recover losses. If you don't need to recover losses, if you have 2 winning days in a row, day 3, do the same. If day 3 is down, day 4, let's see if we can recover day 3. Because if we can recover day 3 on day 4, that means we're up for the week. That's all it's doing. It's using simple, I'm losing a bit, so I need to try and win some back. It's a bit like going into a casino. This is all it's doing, isn't it? We are basically gambling at the end of the day. You can call it what you like, but we are gambling on price going up or down. It's red or black. Same thing. So that's all it is. But I need to do a video really to explain the logic flow, if you like, so that people understand it, because you have the option now to turn it on and off. You've got the option to make it aggressive or unaggressive. You've also got the option to take into account all trades in your portfolio or just focus on one instrument at a time. And you can change it on the fly. And that's the beauty of it. So if one instrument, for example, if the DAX today stops out and the FTSE makes profit, if you have it set one way, the DAX will try and recover its own loss. Even though the FTSE's made money, the DAX will be chasing itself. You can flick the DAX to say, if the FTSE's made money, don't try and recover your loss because the FTSE did it for you. Or you can go super aggressive on both. It's up to you. Yeah, so I need to just explain how you can use it, which is the video I've got to do. And I just want to make sure that video is done beforehand, because people are going to, I know what's going to happen, and it's the same as happened last time. It will take a trade, and the first trade won't be 1% risk. And it's because the logic's looked at your portfolio and gone, you've made some losses, you need to recoup them. But if I don't tell you how, you're not going to know. People just get I just get the question, why is it doing that? It's complicated, and it's complicated is not an answer, is it? It's complicated is a fob off. It is complicated, but so that's what I've got to do. What is normal? Yeah, I think mechanism will, in the same, only moves and pullbacks are of different size. Yeah, but the mechanism bank's going to use moving forward isn't going to change. Like I said, this pattern, when you understand price action, you understand how the market works, you understand what this pattern is. This pattern is a sell order. Yeah, not being able to continue in a sell because there's no buy orders available to absorb the sellers' prices. Therefore, the sellers who are sitting in profit will flip the opposite direction, which is why a 3-bar reversal happens. It's a, can we continue to do what we can? No, we can't. Join the other party. Okay. So you get a much bigger candle after that hammer, because these guys, instead of being short, are now long. Banks and institutions are always in. You always have a directional bias. You're never flat in a bank. Banks are either long or short each of these currencies. They have a float, a balance, which is basically long or short. And if they are long and it drops, they will go into drawdown. So they will add positions in to move their average price and push price back in their direction to be able to take some money off and make profit. This is what banks do. This is why when you put money into a bank, they pay you interest because they're using your money to make money. That mechanism isn't going to change. The way they invest it, the speed, the veracity, and the instruments is going to change. But our job is to identify how they're doing it and what instruments they're doing it on. Yeah, they are always going to be doing it. So this here is absolute textbook 3-bar reversal. So this is your early price action reversal signal to say that the banks have finished this downward sell cycle. It looks like they are entering into a buy cycle. So one of two things will happen. It will push hard to ADR today, give you a reversal alert, and then pull back within that range and continue. Or it will hit the last batch of buyers that could not break long and were overpowered by the sellers, and it will also be overpowered by the sellers. And you will get that, which is a continuation in trend. There are only two things that are going to happen, and I've just shown you one of them. Yeah, it could be the other. But I can guarantee with 100% accuracy, one of those two things is going to happen, because it cannot do that. It can only do that or that. At some point, either that will break and will be long, or that will fail and will be short. It's very simple. There's two choices. It's going up or down. Your clues are in the price action, which is what the reversal alert signal is telling you. The guys that were buying lost. They've just regained control. So we're bullish. If they're going to remain in control, we're going to buy it. But if we don't, you can either DCA in or you can stop out. Those are your choices. You can either take a loss if you're wrong, or you can change your price by adding another order and then wait for the next time that they take control. That's not going to change the way that the way that banks make money. I mean, they might do, but the way the world has worked for the last 100 years can't just suddenly go, change. We're going to do it different now. It's not possible. There's too much mechanism in place with economics. It's just the way that deals work. It's a restructuring of the business, basically, is what we're seeing at the moment. And you know, we've never restructured the business before, so you know, you can see it very clearly, can't you? Normal. So we're buying, we're profit taking. We're buying, we're profit taking. We're trying to buy, we've been overpowered, so we sell. Then we profit take, and then we sell. We can't get through, so we exit and flip long. Yeah, that's all that happens over and over again. This is why everybody learns Fibonacci and why those Fibonacci ratios work. Because if the market stays long, the banks will take profit on the move. They will either take a little bit of profit, a medium amount of profit, or a lot of profit before they add more in to take a little bit of profit, a lot of profit, or a smaller bit of profit. Yeah. This is why we learn Fibonacci, because it happens all the time. It's all it does. You just don't know which way it's going. And this is where the reversal alert signal comes in. It tells you where your next pullback should be. You've had a reversal in structure. The sellers are in control. And the question then is, if the sellers are going to remain in control, you need to be selling it. If that is a pullback, that signal is incorrect and it will go long. But this doesn't tell you which direction to go. This tells you what's just happened, like any other indicator. This tells you that the price pushed up. I know, I can see. This tells you that the price pushed down. I know, I can see. They're only signals, they're indicators. They don't tell you anything apart from what's happened in the past. That's still going to happen. But it's how it's going to happen. That's the difficulty moving forward. If it's going to happen like this, we need to adjust the way that we scale in and out of movement, which means using lower risk or using wider scaling. But this could be an anomaly and not happen again, and we go back to this. And this is where we sit at the moment, in this no man's land of what do we do? Because you just don't know where to go. And the best thing to do is do something different until you've got the answer. When you can see the market doing this for 3 weeks or 2 weeks, it's likely it's returned to normal and this is over. However, it's Trump. So he could start this again. Yeah. And it's a very dangerous place at the moment. This is why we have fear and greed meters. Yeah. The market is in fear. It moves bigger and faster in fear mode because it's scared. So you get bigger, dangerous orders going in. and undoings of things. Yeah, if you've got a portfolio, think of it like your pension fund. If you look at your pension fund on a daily basis, and over a period of 3 days, your pension fund drops 5 times faster than it's ever dropped before, you will adjust your pension fund. And this is all that we're seeing, is banks and institutions having to adjust all portfolio holdings to make sure they stay solvent. You remove your risk from the table, you put it somewhere safe like the Swiss franc with a low interest rate that's not going to return you much, but it's not going to change. And you stay there until, it's like going back in the trenches, yeah? When the gunfire stops, stick your head up. Move forward a little bit. Looks like we're safe. Fear and greed meter comes up. Right, let's try and be a bit risky. Let's run. Still running? Okay. And then you start moving back into normal market territory. This is a shock. We need to see how long the aftershocks take. That's basically where we're sitting at the minute in the market. So you adjust. Where's the volatility at the moment? Down here. It's up and down like a crazy thing. Here, it's flat. It's going sideways. Yes, you go down when it's volatile because you can get very quick movements which make you lots of money. But long term, this is dangerous. Yeah. So it's a difficult situation, isn't it? But hopefully we're out the other side of it now. But they've still got this thing with China. Until they agree a deal with China, I think we're going to be in painland for a bit. But who knows? Morning, Jean-Roger. How we doing? Would it work with fixed lots like with futures? Would what work with fixed lots? Everything works with fixed lots, yeah. Loss recovery can't work with fixed lots, no. Because it just can't, can it? This is why futures is so difficult to trade, because you can't use incremental risk on it. You can with micros, obviously. But yeah. If you want to trade a loss recovery system on futures, you basically have to get in with, if you're trading micros, for example, so you get in with 2 contracts short here. Yeah, if that stops out, your options are 2 contracts on the next trade or 3 contracts on the next trade. 3 contracts on the next trade is a 1.5 multiplier. Yeah, that's risky. So you're better off trading 5 micros short, stop out on the 5 micros. Your next trade is 6 micros. Yeah, that is a 1.2 multiplier. If I understand what you're asking correctly. Yeah. But it can't do that automatically because it works on monetary value. So that's just stopped out, yeah, at a $271 loss. Okay, so next trade is going to be $372. Because, sorry, close profit, yeah. No, where's close profit? Yeah, 324, yeah. So we've made a 324 loss. So the next risk is 372. So that increment there is a 1.15. If you went on with 5 contracts short and you went to 6 contracts short, because you can't go to 5.5 contracts, you're actually multiplying by 1.2. It's 20% increase. So it can, but when you go 6 contracts and it tries to multiply that by 1.2, it comes out as a fraction. So you'd have to manually adjust it. So what you would do if you're using futures is you would be in here and you would turn that off, loss recovery. You would not have a risk amount and you would go with a number of lots, say 5 lots. Yeah. And let the trade get taken. You'd have to turn that off as well. Portfolio mode. So you get in with 5 lots, wait and watch. When it stops out, adjust it to 6 and then adjust it to 7 and then adjust it maybe to 9. Yeah. So if you get stopped out 3 times in a row, you're not even risking double your original lot size. Yeah. And this is loss recovery, basically, is meaning that all you're doing is when you're using a loss recovery system in trading, stopped out on that one as well. What you're doing is you're saying the next trade that I take, because the risk is ever so slightly higher, my stop loss is in the same place, but my reward to get back the previous risk, instead of being there, is there. And then on the next one, instead of being there, is there. So all that's happening is when you're using a loss recovery system is you're requiring price to move a smaller distance to recover the previous losses. You're not trying to make more money. You're making it easier not to lose money by recovering those losses. So yesterday, I was in $1,500 of drawdown by the time we went into the New York session. We ended up 807 in profit. Yeah. So I think there was 3 losing trades yesterday. And then it broke long and we had a profit. So that one recouped the previous loss and it was still down on the day. So the recovery system was ever so slightly using higher than normal risk on the US session, and we had clean breaks on the US session. So it was really easy to get that money back because we're using ever so slightly higher risk, which means that it didn't have to move as far to get that money back in the bank. And that's what it's doing, basically. It's just trying to help you get the cash back quicker. If you want to get in short, that is potentially your pullback. But it's Friday, so we might sit around. But anyway, so yeah, stopped out on both of those. So, you know, the recovery here, so these buys that we've got in place here now are the same risk as we took on the shorts. So the idea behind the loss recovery system and leaving these pending orders in place is if we break short on the DAX and we stop out like we have here and it pulls back and does this and then it breaks long, this risk is exactly the same as this risk was. So if we get a 2R to the upside, we can close it with 0 loss. So if we go into rotation for the day, we just break even. We don't lose any money. It's a little bit like the stock index hedge strategy. You're just not going to make money, are you? We're waiting for a clean break. So if this now doesn't do anything, in the New York session, the US indices will take over and they will be risking the same amounts. So if we go to these 3 now, you'll see that the Dow, although the Dow yesterday was a clean break, profit, easy, it is now using higher than normal risk. It should be risking 320. It's going in at 370 because its job now this afternoon is to try and recover the morning's loss. So it's taking over from the UK session and going, right, how did it go this morning? How did it go yesterday? If everything's good, we just go normal and we risk the normal risk. If yesterday was good, this morning was bad, we'll go a little bit heavier and try and require less movement to get our money back. If we can get back to a break-even state today in the first trade or 2 trades, and yesterday was profitable, reduce the risk back down again, take the pressure off. Yeah, so we're just trying to recover and then take off pressure. So it's gradually and dynamically adjusting your risk based on your performance, which is what traders do. That's our job, is risk management. And our job is to create alpha. Our job is to create profit in the account. If we haven't been doing well, we need to make sure we get that back because our job is to make profit, not to sit there and run a strategy that continuously makes losses. If it continuously makes losses, we're going to need to get aggressive to recover those losses. If we don't, you could end up getting a P&L that just goes like that. But if you apply loss recovery to a P&L that goes like that, at some point during that, it will go like that. Because this recoups that. But not with anything stupid like martingale. And this is where everybody goes into martingale mode. Test it. You can test it in martingale. The existing version, you've got 3.02. You can stick that lot multiplier up to 2 if you want. Go and test it. Absolutely kills it. It creates unbelievable profit until it blows the account. Whereas something like this will not create unbelievable profit, but it will also reduce drawdown dramatically because when you do get the wins, and they will come 30 to 40% of the time, it gets all of your losses back. So your P&L tends to go like that if it's bad rather than that. And then it gets good. So you actually make more money because you're flattening out the drawdown part of your equity curve by recovering losses faster. That's the logic. I've basically just done the video. So There you go. But yeah, if you're using futures, unfortunately, you can't trade increments. So you have to be a little bit more manual with it. Thoughts on Euro Swiss? Dell RSI extension plus potential good news coming? Potentially. Now. Where is it? Schlegel should be speaking, literally should be speaking now. Maybe it's delayed. Yeah, I mean, where do you hear potential good news coming, though? So this propulsion gap here, which is where we got to before the gap down, is exactly where we are now and rejecting. Not extended on the hourly, on the RSI, has been, but it's not far off. That is your next upside support, which is going to be resistance. So you've got 125 ADR to the upside potentially if that fails before you're going to find sellers. So it's either going to come from there and pull back on that leg, or it's going to break and push up to 125 ADR and then probably pull back. 4 hour, you are extended. So yeah. But you've just had that horrible reversal long, haven't you? Which has taken 2 weeks. So yeah. But it's in when you see it extended and embedded and you're thinking about taking your first entry, that's always a little bit of a red flag for me. That's what you want. When you see something embedded up here and then it's getting more embedded, it's grinding. And it will stop grinding at some point and it will reverse. But that's not a bad area. So, yeah, if me taking this short now, and I'd be wary about shorts because it's expensive, but if I was taking a short there, I'd be looking to scale in 3/4 of an ADR apart. And then you've got 1 ADR up to your next potential resistance somewhere up here. So entry, entry, entry. If it gets all the way up there without pulling back, you're going to get some kind of pullback on it, aren't you? So that would be 3 entries. But yeah, looks good. I think I read on Forex Factory, he tends to be hawkish and the Euro Bank is having a holiday. He tends to say what needs to be said. The Swiss, yeah, I mean, it's a binary thing, isn't it? He's either going to be bullish or bearish when he talks. If he's bullish, if he's bearish, you know, you can't predict what he's going to say. They have said, the ECB, the Swiss National Bank, that they are happy to drop down to 0 interest rates, and they are also happy, if necessary, to go back down to negative interest rates to encourage growth. So if that's the case, if he announces one of those two as a probable in the next meeting, the Swiss franc is going to drop. But it could be the opposite, couldn't it? Don't forget, the Swiss franc is a safe haven, so it doesn't really matter what is said by the Swiss National Bank. If Trump decides to go aggressive and start annoying everyone again, everyone will sell their stocks and put it into the Swiss franc, in which case the Swiss franc will rally in exactly the same way as it did last time. So the Swiss is one of those instruments where fundamentals have never really meant an awful lot because it's a safe haven. So you're going to get money driving into this thing, regardless if Trump does something silly. which he thinks is not silly. But the rest of the world is looking at him going, what? But it's a lovely rejection going on. So low time frame, you got a reversal alert kicked in. Look, M15 at resistance. Beautiful wick rejection. Lovely wick. Look, I mean, 5 minute wicks to the upside, yeah? Wicks to the upside. There is massive selling pressure. So, yeah, it looks great as a short. Take it. What can go wrong? It either goes against you and you deal with it, or it goes your way and you go, brilliant. I'm protecting a lot of my trades at the moment. I've got a lot of stop outs at break even on my account at the moment because I am being super, super cautious. When I'm catching stuff, it's really running. When I'm not catching stuff, I am really, really getting break even as fast as possible. It's annoying me, to be honest, but that's a lovely rejection going in. Look, you got a bearish engulfing just going in there on tweezer tops. So it doesn't get much more bearish than that. That's a reversal alert retest. If you want a textbook M pattern reversal, there it is. And when you get down to here, stick a break even on yourself. And as long as you get less than a 50% retracement, you're off. If you get a 50% retracement, you might get stopped out or leave your stop up there. If you're not using a stop, it doesn't matter, does it? If you're position trading, just plan your next entry. Do you think the Italian bank having a holiday is even going to make a difference? Well, no, because this is not being moved by the Italian banks. It's being moved by the others because they're shut. It's a bank holiday and it's a Friday. So, yeah, may not get a lot of movement. I was thinking if FTS and DAX most of the time going to move together. Sometimes they do, sometimes they don't. The DAX and the FTSE are sometimes correlated, sometimes not. I have noticed over the last few weeks these markets have become a lot more correlated, but that's mainly because obviously the world is not interested in stocks. Yeah, so all portfolios are pulling out. My pension, I looked at my pension yesterday. I wish I hadn't. I think it's 60% of my pension is index linked. So it's all going to go down, isn't it? But it's all going to go back up again. So it doesn't really matter. It's all relative. But because the general consensus is not industry specific, sector specific, or country specific at the moment, it's worldwide. Everything's going to move at the same pace, really, and at the same time. So if you look at the correlation index now between all the indices, it's virtually 100%. Yeah, it's very, 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 very high. That is not always the case. The FTSE I've had plenty of days where the DAX has broken long, the FTSE's broken short, and I've made money on both of them. Yeah, but right now, everything is very correlated. So you need to bear that in mind, obviously, with risk, because if you look at this trade that I've just stopped out on twice, it's virtually the same trade, isn't it? However, if that stop loss had been there, I would still be short. But the stop loss on that one doesn't matter if I'd placed it a long way above it, it still would have stopped out. So they are correlated, but they're not quite. And they will come out of correlation at some point. But, you know, don't forget, the whole thing that's happening at the moment is a blanket. It is a shotgun, blunt instrument, blanket, screw you world. So the whole world is doing the same thing at the same time. He's kind of almost created one currency cross called US dollar X. And it's basically everything against the dollar. So the dollar is doing this and everything else is doing the opposite. Yeah. The stock market is an inverse index to the US dollar at the end of the day. So it will do the inverse to the dollar. When the dollar goes up, it goes down. When the dollar goes down, it goes up. Or, depending on which index it is, they both go down at the same time at the moment. You know, it's just nothing's really moving the same way it used to. It all looks slightly similar, but it's not, is it? It's very different. I did a little, when I was off last week, I wasn't really off last week over the bank holiday. I had some time, and I spent a little bit of time looking at YouTube and watching, catching up on just other traders and looking at what they're doing. And it's quite nice to see underlying panic, if you like, everywhere. Not so much. There's a lot of the guys that have got tens of thousands of views on YouTube who are not doing it to make money trading. They're doing it to make money, affiliates or out of YouTube revenue and stuff. They're all like, this is what you need to do. This is what you need to do because I'm an expert on this, because I've never done this, seen this. I've got no idea what I'm talking about, but I'm going to tell you it and you're going to follow me anyway. There's a lot of that going on. But there's also a lot of real traders out there that have been doing this for a long time that follow fundamentals and technical analysis, who are also sitting there going, don't really know what to do. And it's nice to see that there's those people who I respect are not really knowing what to do, because it's good to know that you're in the same boat as the rest of the world. And there's a lot of analysts in banks. I chatted to my mate Dave, who weirdly, he's not Dave from the banker Dave, but he's Dave, and he has worked in a bank. He's ex-Barclays. And I was typing to him on Telegram over the weekend, and kind of just, what do you think is going to happen next? And he was like, I ain't got a clue. That was it. I ain't got a clue. And he's got buddies in banks. They haven't got a clue. But they're just doing the same as they usually do, moving price. So in banks and institutions, you are less affected by what goes on in this type of industry and this type of market movement and condition, because you have the power to move the market. If Barclays want this to go up today, they will just buy shed loads of stock and it will go up. They have the power to move the candlestick. So as long as they can move the candlestick in both directions, they won't stop making money. It's just that every bank is doing different things now in different ways. So the movement is more erratic. That's kind of what his analysis on it was. There's a lot of headless chickens running around with shotguns. They've got a lot of power, but they don't really know what they're doing. So as long as you've got the power, you can make money. It's like the money makes money thing, isn't it? Yeah. If you're a millionaire, it's really hard not to be a millionaire, because if you've got $1 million, you stick it in something that makes more money. That money makes more money, which makes more money, which makes more money. And it's a never-ending cycle, which is why billionaires become billionaires. Banks are the billionaires. Yeah, they're still moving this up and down. There's still buys and sells going on. But headless chickens now buying and selling, pretty much. A lot of banks have lost a lot of money as well, he reckons, in the gaps, which is what they call the inefficiency. So, there's still banks are going to be underwater. Well, I was talking about this DAX gap. Yeah, there's banks underwater in the DAX gap. They are going to be wanting as hard as possible to push back down to this level, because there is inefficient trading here. There are short orders that cannot complete the opposite sides. So they are underwater in drawdown. Yeah, which is why gaps get filled. Banks and institutions need to fill inefficiencies. Gaps get filled. The reason they get filled is because inefficiencies need to be balanced. There's a whacking great hole here, but what they're doing at the moment is filling, I can't go out to it, but the previous hole. Yeah, at the moment they're filling the one that was created before. Needs to be on a bigger time frame, don't I? Yeah, got to get up there as well. They've done that one on the Dow, so the logical thing to do now is to go there. But they're not going to be able to go there unless other banks are wanting to take the opposite side of those stock trades. Yeah, and if the fundamentals shift in such a way that the motor sector gets screwed, they will not be able to get back there, because if stocks in Volkswagen and all the other major car companies in Germany, this is the US 30, if I was looking at the DAX as an example, all collapse, it ain't going to fill the gap. It's just not going to happen. Difficult. It's a very difficult time, isn't it? What's the setting you have on the RSI? RSI 10 on 4 hour. So if you're using 14, you'll be just below 80. There's very little difference. Setting's a setting. It's, the difference between the RSI 10 and the RSI 14 is virtually nothing. It's embedded. So it's extended and embedded. That's all Doesn't matter what the number is. 10's just faster. Excuse me. And again, 10, 14, nothing wrong with 14, nothing wrong with it at all. But I'm using 10 because when the market's moving faster, I want to move faster. I want an instrument that's more sensitive. But doesn't matter, one or the other. They both work. You'll just get different entries. That is the only difference. Like I keep saying, there's no right or wrong, there's different. Yeah, if you enter above the 80 level with the RSI 10, you are now poised for a reversal alert short. If you are using RSI 14, you are not paused, ready for a short. Yeah, but if you're using the 75 level, you are paused, ready for a short. If you're using the 10 and the 75, you are already short because you would have got in here. But the 14 guys will be getting in today. Yeah, so it's the difference between that and that is the RSI 10 and the RSI 14, half an ADR off your first entry maybe. And some of them you'll miss and some of them you'll get. And the ones you get that go into drawdown, you wish you hadn't got. The ones you get that went, the people that weren't in it because they were on the 14 will be wishing they'd used the 10. What's it going to be the next time? I don't know. Pick one, stick with it. Doesn't matter. Just trade what you see, trade what you get. When you get in, the odds are exactly the same. It's 50-50. It's either going to go up or down when you take the entry. And if you take the entry off the 10 or the 14, it's irrelevant. It's just a different trade. Yeah. Think about everybody you ever look at when they're on any social media anywhere. When they're in a trade, they're in a trade. The outcome of that trade has got nothing to do with the reason they took that trade. Someone will say, I've taken this trade because it pushed up above that level. It missed it by 3 pips. It came down. It then pushed up. It crossed below the RSI. And then I got a signal from my wick candlestick indicator to tell me that the wick was 50% larger than the body. So I took a short. What's his odds of that trade working out? If you use the RSI 14 and a reversal alert, what's your odds of that trade working out? Exactly the same. Doesn't matter. The people that make money are the ones that use risk properly. And if you're using a stop loss, don't place the stop loss right at the top of that candlestick. If you're going to use a stop loss, stick it a quarter of an ADR away. Give the market room to breathe today. If you're not using a stop loss, fine. We wait until tomorrow, the next day, or this afternoon, whichever comes first, because you're either going to need to add a trade or remove that trade that worked out. But whether it moves up and down has got nothing to do with the wick size on a candlestick, a reversal alert, an ADR indicator, an RSI indicator, a moving average, a MACD, or anything else in the world. If your dog throws up in the left corner, go long, the right corner, go short. If you've got a dog, next time it throws up, remember that. Long left, short right. Take a trade. Pick an instrument. You're going to have to get it to paw the keyboard to find you an instrument, but your dog can pick trades. My son, 14 years old, one summer holidays, I taught him to trade. I said, when it goes up, press buy. When it goes down, press sell. Came back, he had P&L in green. Didn't even know what a P&L is. It's that easy. He's got a 50-50 shot. I'm not having a go at you, Marco, by the way. I'm just saying, just pointing out the fact that it doesn't really matter. Doesn't matter if you use the hourly or the 4-hourly. Yeah, it's just a different time frame. It's a different representation of price over time. 3-bar reversal going in on the Euro Swisslet. So give this another 34 minutes. Push, pause, pull. Exhaustion. Yeah, look at that. Exactly the same. Didn't work out. Now, did that not work out? Because look at that. If you look at a 3-bar reversal and the definition of a 3-bar reversal, that you can print out and put in a book and sell it. That is a textbook 3-bar reversal. Strong push, rejection, indecision, rejection, strong sell, close below the wick of candle 2. Absolute textbook. High of the day. Stop run, if you believe in it. That is absolutely the trade of the century. it failed. Why? Because it had a 50-50 chance of working out. I can show you 100 of them that work, and I can show you 100 of them that don't. What that gives you is a 1-to-1 risk-reward ratio. That's all you're ever going to get. There we go. That's all I've got today. So I might be back later. I might not. I'm going to try and message on Telegram from my meeting just to let you know what I'm doing. Because when I'm about an hour and a half into the meeting, I can kind of say, how long do you reckon we got? And if she says about another hour, I'll have to cancel it. So I'll find out later if I can make the stream this afternoon. But I was told it was an hour and a half, which is why I did it at 12:30. And then when I actually spoke to the mortgage woman, not the person that had made the appointment, she said, hour and a half, you'll be lucky. So I can't change it. So I'm either here this afternoon or I'm back on Monday, one or the other. But good luck with today if you're continuing to trade. Look at that beautiful signal there as well. Beautiful upside rejection. Lovely sell. So that is a 4-bar reversal. Beautiful. It's not working, but it's a beautiful pattern, isn't it? Looks pretty. So yeah, I'll be back this afternoon. Hopefully, if not, I'll be back on Monday. Yeah, we will see where we go. But if you've got any questions or anything, let me know. I'll be in Telegram on Discord. I'm going to really try hard to get that video done early next week. Might even be able to get it done over the weekend. I'll see. But as soon as I've got that video done on how the loss recovery mechanism works, I will get version 3.04 pushed out. And then obviously, I mean, it's really not that much different, but it, you know, you can have that version. But I will get it out as soon as I can. I just need to make sure people can use it properly. So, all right. So have a good day. Anything you need, let me know. Other than that, I will see you either later on this evening, this afternoon, or on Monday. Have a good weekend if I don't see you before.